In certain cases, what can happen is that there may be a hidden goodwill. You're not specifically told that when a new partner comes in, there's a goodwill which is to be valued, but you have to infer it or you have to find it out. And how do you do that? The normal assumption is that the value of the assets in the business should be equal to the value of the shareholders' fund or capital. Suppose there are two partners, A and B. They have capital of 30,000 and 30,000 between them. There's a new partner who's C, who's admitted for 1/5 share, and he brings in 30,000 as cash. Now, ideally, if you look at it, when he brings in 30,000 as cash for 1/5 share, the total share should be equal to how much? That should be equal to 30,000 divided by 1/5 or 1,50,000. But if I notice, the total capital in the firm today is how much? It is 30, 30 and 30 or 90,000. In such a case, the assumption is that the difference between what the capital ought to be and what it is nothing but the goodwill, which should be provided for in the financial statement. This is what we're going to look at through actual numbers in this example. Anand and Joy are partners in ABC Co., a partnership firm with a capital of rupees 50,000, 55,000 and 40,000 respectively. They admit Magan as a new partner with 1/5 share in profits of the firm. Magan brings in 25,000 as his capital. Now, you don't know what is the existing profit sharing ratio between the partners, right? You also don't know that after Magan came in, what was their share. If nothing is given, the safe assumption is that they were sharing profits and losses equally prior to the new partner coming in, right? And even when he's come in, after that also, whatever is left, they are sharing the profits and losses equally out of the remaining one, right? Or in other words, the ratio is 1:2, 1:2. It's not that their profit share is 1:2. What I'm saying is they are getting half of the remaining. So if 1 is the total, 1/5 is what goes to Magan, right? What is left is 4/5. Anand will be getting half of 4/5. Joy would be getting half of 4/5, right? But this is not the moot point in this question. The question is that he got 25,000 for 1/5 share in the profit of the firm. So if Magan got 25,000 for 1/5 share, ideally the total capital should be equal to how much? It should be equal to 25,000 divided by 1/5, or in other words 25,000 into 5 divided by 1, 1,25,000. But how much is the share capital right now? It is 55 and 40 plus 25. Total capital between Anand plus Joy plus Magan is equal to 55,000 plus 40,000 plus 25,000, which is how much? 55 plus 25 is 60, 80, 1,20,000, which means that the value or the difference between these two is the goodwill, which is also known as the hidden goodwill. So 1,25,000 minus 1,20,000 gives you 5,000 as the value of the hidden goodwill. Now 5,000 is the total value of the goodwill. How much is Magan's share out of this? Magan is the incoming partner. He's getting 1/5 of the share. So Magan's share will be 1/5 of 5,000 or 1,000. This is the amount he has to pay to Anand and Joy. In what ratio? Since nothing is given, we are assuming that they were sharing profits and losses equally earlier, and they are sharing it equally even going forward out of the remaining one. So the ratio between them remains the same, or in other words, their sacrifice is also equal. So we will pass the entry debiting Magan's capital account by rupees 1000 to Anand's 500 to Joy 500, right?